What's up, traders? So in today's video, we're going to be going over how to day trade stocks. So first, you need to have a game plan, right? Pick your stocks. So I have this whole little thing that I wrote. Don't worry about it. I will be showing it what I wrote, my notes. I wrote it about 24 hours ago. But first, you need to identify a stock. So the stock that I identified immediately was Beyond Meat. Now, why did I identify Beyond Meat? The reason I identified Beyond Meat was because first they had a drastic dip followed by a severe, pretty good V-shaped recovery. So I knew there was momentum and buying power going into the stock, especially right here. A lot of other stocks were going red. Beyond Meat was green. So I was immediately interested in that. Now, I wasn't interested on getting in on the high. That is not what I was interested in. I was just interested on the fact that they were green and bullish when other stocks were being bearish. Okay, so then I went to TradingView because honestly, Robinhood, you should not chart anything out according to this. This would not be the best way to chart out anything. You don't really have the big picture. You need to use some other type of software. Use a different website. I'd like to use TradingView. So immediately we hop into TradingView. We hop into the 1 hour chart just to chart it out. Immediately I see this downtrend. I see this level of support. You know what I immediately analyze and realize? I analyze that we have a descending triangle. I call this descending triangle, sometimes a descending wedge. I don't care what you call it as long as you know that it's there. So immediately identified this. Okay, keep in mind, this is like 20 minutes after market open, so it's around this area. Let me go to the 15-minute chart. So market open right here, July 31st. You see this green candle up? That's this green candle up. You see this red candle down followed by a green candle up. This is that red candle down followed by that green candle up. And this severe dip and then this severe dip to a lows of 122.40. To the lows of 122.40. All right, so I had this chart analyzed beforehand. And if we see on the short term, right, we had a short little uptrend with a support line. So we waited for that to break. We could have even gotten in here to the bearishness and gotten out right around here and gotten into a trade right here. But I didn't want to do that because I was expecting it to bounce off of the support line exactly like it did. My entry point would have been 122.40, a stop loss under here, a stop loss that would be around 120.30. So a $2 stop loss, a take profit up here, 126. That would be a $2 loss for a $4 win. That is how this trade would have panned out, and we're still not done. Now you might be thinking, well, how did you know this line so well? Well, we identified that line of support. Correct. Then we knew the market was being sold off, and around 10, this is just what I've learned from actively looking at the stock market day in and day out. I learned that if stocks are being sold off, if the market is red, it usually reverses a bit around 10. We see that it's around 10:20. I saw it going red. I saw it approaching this line of support, so I was immediately interested in it, thinking, yes, this could be the reversal, this could be the bounce. So to further add to it, to further add to the bullish momentum behind Beyond Meat, I went to StockTwits. I went to StockTwits here. We can see they have earnings on Tuesday. So I clicked on them and I saw the news. People are bullish, 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 bullish. You have one bear, but mainly bullish. A lot of people are mainly bullish, 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 bullish. Okay, so that further added to my theory as to why I would want to get into Beyond Meat at this area of support, right? That's basically it. You don't need to have charts that look like this. I mean, what the F is this? Let's be honest. What is that? How are you going to use that? I mean, of course, you would use each indicator separately, right? But at the same time, you could have just used the MA50 close, right? You see that it bounced off there. Once it broke the MA that bullish, you get in right there. It then, this line support became support again. Then it broke through this line, and now it can have a good breakout. You could actually take this trade next week. You see how I analyze the stock, and you could take the trade next week. Now, another way you could have used another indicator is you could have used the RSI indicator. So we see here that they have a high on the RSI, and then a higher high, but on the RSI indicator, that's a lower high. That is called bearish divergence. Now, had it been the opposite like this, that would have been bullish divergence, but that's not what happened. What happened was this, all right? We see this bearish divergence. Now, just because you see this shouldn't be the end all be all reason why you get into a trade. Indicators are not the end all be all reason why you hop into a trade. Okay, it's just something that will further confirm your theory as to why you should get into a trade. Okay, so now let's look at how I analyze the stock. So we look for a pattern, figure out a pattern, figure out the sentiment. So here we have first find stocks that have volume and will move. You have to do this before market open. Do not try to analyze a stock at market open. Do it before, do it the night before, but know that they'll have a certain amount of volume if they're expected to have good earnings or bad earnings. Again, this is how I trade. This is my game plan. Have a game plan when you trade. Okay, next you have to identify key historic levels of basic support and resistance. Also find trend lines. Identifying any form of patterns listed above. Identify one of these patterns listed above. Next, use different time periods. Draw trend lines in the 1 hour time period, but use the 5 to 15 minute for a tighter entry point, still respecting the trend lines. Can be a scalp if need be. Next, after this, focus on the sentiment of the market and compare with stock news. Example, if the market is red but the earnings after hours are anticipated to be good, the stock might bounce / play off key levels we already identified. This will happen at market reversals when the market is going from red to green or green to red. Vice versa, it doesn't matter. How many times have you seen that? A stock is going to announce good earnings and they start to just rally up towards market close. Next, you have to have a game plan. This is one of the most important parts. Have your entry point and your exit point. Your entry point should be at either support or resistance, whether you are bullish or bearish. Take profit at either the bounce off resistance or support, or wait for another level to be broken through so that it can further confirm that you should stay into it. So if we look at Beyond Meat, it broke this level, so that's my further confirmation that I want to stay in it. I could have gotten at support, took profit at resistance, but it broke through this level of resistance, so that's further showing me that I want to get into it. Now let's say I get in on the put side at this level of resistance and it goes down to support. I can either take profit there or stay in the trade if it breaks past it and it continues on a downtrend. So now we have our exit point or stop loss, and it should be when it breaks in the unanticipated direction. So the unanticipated direction for me would have been a break down. All right, they have earnings. I'm expecting bullish momentum now at this time of the market. So if it breaks down, that is not going to plan, and I'm taking a stop loss around down here, or tighter stop loss right here if you want. Now, these are other indicators you can use at further confirmation. You can use the RSI, you can use the EMA, you can use the MA, you can also use the SMA. Also good would be the MACD divergence or the Fibonacci. It just depends on how you want to use these indicators. But yeah, that's basically it, guys. That's how I basically traded this. I didn't get into the trade. The reason I didn't get into the trade was simply because I did not have enough buying power. We see here I had $10 of buying power, but I had this chart analyzed around here. Okay, and I would have waited all day for this sniper entry right here. There's no reason to get into it right here. Just wait, be patient. If you use trading views, you can actually set an alert. You can add an alert on the trend line. If it ever hits that, they will alert you that it hit the trend line. If it ever hits this trend line, you can set an alert for this trend line. All right, guys, you have to wait for that sniper entry. That is the most important part. If you're getting in here, right, and it go red, your profits would only be that much. But if you're getting down here, your profits would be that much, your stop loss would be here. If you got in here and your stop loss is right here, you take that big loss instead of just getting in right here, stop loss right here. Have a plan, okay, guys? Have a plan. Even the most basic plan is a plan that is a plan. A basic plan is a plan, all right? And you want to have a plan. A plan is better than no plan, okay? This is your most basic plan that you could have. All right, well, it's not the most basic, but it's certainly a plan that I use. So yeah, I didn't have enough buying power to buy this. If we look at this account, I do have enough buying power to buy this. If we click on this free share I have $1,300 in buying power. So I certainly could have bought it, but I didn't want to swing anything, and I had already used my 3 day trades for this account, and I would have liked to take profit before. I wouldn't want to swing, so I would have gotten my account PDT'd, and I don't want that to happen. I'm already swinging this, which I am expecting bullish momentum to continue on Chegg, and if we see after hours, they are going up already $1.03 or 1.27% after hours, so that's already good in itself. But yeah, guys, that's basically it. All right, I didn't also want to YOLO this account anymore. I made $389 with Amazon with my debit spread. So after I did that, I just bought 24 shares of Jumia. I have 40 shares of Jumia here. If you don't know, I made a video on why I'm bullish on Jumia, and it's doing pretty well. So if you guys want to watch the video, go ahead and watch that video. Yeah, I've been making money with Jumia so far. They've been increasing, and yeah, so that's basically it, guys. Let me know what you guys think. Is this a smart strategy, a stupid strategy? You can say that I have no clue what I'm talking about. Don't take any of my advice, all right? Implement it into your own forms of trading and use it as your own form of further confirmation as to why you'd want to get into a trade. Okay, guys? But that's basically it. Thank you guys for watching. All right, thank you guys for the support on the videos. Thank you guys for subscribing. I hope you enjoyed this video. Leave a like. Let me know what you guys think about it. So anyway, guys, I hope you enjoyed the video. I hope you learned something from it. Like I said, we have a small YouTube channel. Any questions you have, leave it in the comments down below, and I will try my best to help you. But that's been it, guys. Peace.